The Texas Stock Exchange, based out of Dallas, began trading this week. It's the first real test of one of the most well-funded exchanges in decades. Joining us now for some extra insight about this is Michael Sury. He's an associate professor of finance from the University of Texas. Professor, welcome back to our show, and thanks for talking to us today.
Thanks for having me, Will.
So the Texas Stock Exchange has only been trading for just a few days now. What are your biggest takeaways from that? What stands out to you?
Well, I'd say my biggest takeaway is that they've executed a pretty flawless technical launch. Building a modern financial matching engine from scratch is one of the hardest things to do in tech, and they've done it in 18 months. Right now, it's a quiet, phased rollout. They're starting with test trading and rolling out certain symbols incrementally. At the moment, I think they're just doing test symbols, but live trading starts on Friday. So it's not a real chaotic frenzy. Instead, it's a pretty disciplined institutional grade proof of concept.
Definitely interesting to see what happens on Friday and then moving forward with that. But can this really compete with something like the New York Stock Exchange, for instance, or the NASDAQ?
Well, I don't think replacing the New York Stock Exchange or the NASDAQ is their intent in the short run, but can they compete? Yes. They're playing a very smart long game. Remember, they aren't some underfunded startup. They've raised something like $275 million, which is a record for a new stock exchange. And it's backed by investment giants like BlackRock and Citadel. Still, they aren't trying to replace New York tomorrow. They're using this kind of phased rollout. So ETFs this fall, corporate listings by winter, and IPOs in 2027. And by offering dual listings, their strategy is that companies can test the Texas waters without actually leaving.
Yeah, tell us more about, for anybody out there who might be wondering, who this exchange is built for exactly.
Well, I think the exchange has been built really in recognition that the center of gravity in business is changing, and Texas is becoming more popular with major corporations. So this platform has been built for established, mature companies. It's intentionally avoiding the so-called kind of penny stock or speculative meme stock crowd. They are setting a single high-tier listing standard. And so they're squarely targeting mid-market and large corporate entities, especially those in energy, manufacturing, and the tech sectors all throughout the South and Southeastern United States, some of whom might actually feel otherwise ignored by the traditional coastal exchanges.
Yeah, why would a company, would you think, choose to list here instead of maybe somewhere else?
Well, I'd say the primary factors are the Texas kind of business first branding, the legal protections that are here in Texas, and cost considerations. As you know, last year Texas passed Senate Bill 1057. Now that creates certain thresholds that must be reached for shareholders to propose changes to corporate policy. It also rule and set up specialized business courts. So this gives corporate boards a strong shield against frivolous shareholder lawsuits and aggressive proxy fights. So if you're a CEO tired of activist investors second-guessing commercial strategy, Texas is kind of now rolling out the red carpet with a predictable pro-management legal ecosystem. And the exchange has also streamlined the cost and expense structure for firms who choose to list with it that makes it very competitive with the NASDAQ and NYSE.
Interesting. Well, in these final few moments, Professor Sury, what should we watch for to see if this is really working and could succeed in the future?
I'd say there are kind of three specific milestones over the next year. First of all, this fall, do we see major asset managers actually launch their ETFs and exchange-traded products on the exchange? Secondly, by the end of the year, we might ask the question, which Fortune 500 companies or major private equity firms are announcing that they're dual listing in Dallas? And thirdly, in 2027, the question is, can they land their first major exclusive initial public offering? Now, if they can hit these targets, then what we've been calling Y'all Street might well become a permanent fixture in global finance.
Yeah, we'll have to pick this conversation up in a few months' time to see how everything goes. But Michael Sury, thanks again for joining us here. Always nice to talk to you.
Thank you, Will.